Welcome to the weekly report. We have a to-do list. I want to talk about NVDA. I want to talk about Jacksonhole. I want to talk about some predictions for the end of the year of the market due to the information we got from Jacksonhole. I want to cover the economic data coming out this week because it's a pretty loaded week. And then I want to do some reflection on the podcast that just happened. Let's jump into it. We did this charting 2 weeks ago, and I said on that report that I think that the top for NVIDIA could already be in. Saw it hit a new high. I guess it was not during open trading hours, but you can see that the video went slightly higher. It was a quick turnover. I mean, we basically completed a full fifth wave in 1 week. My short contracts that I've stayed short through the video through all of this, mind you. So, I mean, a lot of those have already come back to me, and I'm expecting an ABC retracement. Actually, I went back when I was trying to remap this because I couldn't quite get this to map out, and I was trying to figure out how did I not make this mistake again. And I actually did something I usually don't do, and I had ChatGPT find me other people who did Elliott wave analysis with the video, and I was kind of looking at this one in particular where they have their wave one right here ending in April, and then they called this their wave 2. Now, if you actually map that out with your Fibonacci's, it's pretty ugly. You can't go off that because that was my original assessment. So they had I was thinking that was a potential wave 2 there. It was a lot cleaner, but they have their wave 2 being here. I mean, if you map this out, it's not very clean at all. You're not hitting your 1.68 or 1.382. Very odd to see a wave 2 do that. Not impossible to only go back to the 0.786. But it does work. It then also makes this cleaner when you're looking for a retracement on your wave 3. This looks more probable. It makes it look like we've actually hit our 0.618. I'm not drawing these lines very clearly, but basically them doing that allows them to make sense of this wave 4 and call this a bottom. Whereas before I was saying that wave 4, well, in the Discord at least, was saying that wave 4 hadn't come in yet. But it makes sense either way. I mean, some of you might not care about anything I just said. What's important here and what I think you should take away is that we're likely to see an ABC to the downside. And actually, if we go back, I actually went way back, charted the past few years for NVIDIA. But if we actually go back to 2021, we could see a similar actual development. We have this very similar wave 1, 2, 3, 4, 5, getting a top on the fifth wave, and then we have the ABC retracement to the downside. I'm expecting something very similar to happen with NVIDIA. Here's the thing that you can also do with these that's interesting. If I go back to my wave 1, which actually my wave 1 is probably like back there. Probably should be right there. That's probably accurate. Look at how our A is pretty much down to the 0.5. B comes up and touches the 0.7. You know, it's very consistent that you touch these critical levels on the 5-wave pattern. So I would be looking to do the same exact thing. And when I'm looking for entries and exits from here on out for NVIDIA, look for similar touches on the 3-wave cycle or pattern to the downside as a retracement on the big move for the stock. And so the big takeaway from all of this is that into the end of the year, I don't think we're going to see that 5th wave rally. I think that could be easily the same thing for the S&P. I think that this actually might not be a 5-wave pattern. You know, I've even written here potential 5th wave could play out until the end of the year. I no longer think that is the most likely outcome. I think that this could be a B wave here and then a C wave playing out. And then you could get a 5-wave pattern down actually for the S&P. We'll see. We will see. But what does that mean for NVIDIA? How do you get the fundamentals to fit into that? And for that, I'd actually like to play this clip from the All In podcast.
Everyone is spending a shit ton of money on compute, and they are trying to get as many server racks as they can. They are trying to get as many chipsets as they can. They're trying to get as much server time as they can. And everyone's got this idea that the more compute I can throw at a problem, the return is going to scale linearly. And it turns out that, like with most things, the answer is likely not.
And I just want to highlight what Friedberg said there, because what these companies are looking for is a good return on their investment into this technology. And right now, everyone's just rushing into it, kind of blindly, not even knowing what the return on this investment will be, which is why I think that's my thesis for why this might be a small bubble. Now, the counter argument is that they'll constantly need to redo these purchases to get the updated technology, because this technology updates year over year. And, that's the big question. The speculation behind the stock is like, okay, is this the new normal? Is this like the internet where there was a surplus at the beginning, but eventually over time, demand came and filled that, and then there was a need for all these technologies? Or is it a true bubble where everyone's rushing into this right now, and there's just simply no need for the amount of investment that they're putting into the space? I think a lot of that conversation right now is speculation, but I also think that if you look at the fundamentals for the stock, where it's priced, how expensive it is, where AI is currently at, it seems to me like the most likely outcome is that right now, in particular, too much money is probably being thrown at this. And some companies are probably over the next few months, or even already, trying to gear like, how much are we actually getting out of all the investments that we're putting into this tech? And so I think fundamentally that is why you could see a retracement on the stock. Now let's head over to the Discord, where I've been sharing some charts that were mentioned at the Jacksonhole meeting. I have actually this one pulled up on my web browser. Jerome Powell was talking about this one in particular a lot. What you're seeing in this dark blue line is the central bank balance sheet. The light blue line is the NASDAQ 100. You can see the tight correlation that is usually upheld here, and how we have this big dispersion currently occurring, and with the Fed not showing any indication of wanting to expand their balance sheet right now, I would expect this to come back in line to meet each other at some point, and I think that point could be coming up soon. We can see that it's already started to. So I think the idea that the S&P will hit a new high this year is becoming less and less likely. We were speculating on it 2 weeks ago. I think right now we probably have enough data to say that that is probably not the most likely outcome. So when I'm looking at the S&P, and I had this question here, will we get a potential fifth wave to the upside, maybe close at a double top or near an all-time high for the S&P? I'm thinking no, which means that I most likely think that what we're seeing right here was a B wave, not a third wave. So I'm not thinking that this is a 5-wave pattern anymore. I'm probably going to go with my flat 335 thesis, and I'm thinking that we are still in a potential C wave retracement to the downside, and maybe even going to develop soon a 5-wave pattern to the downside into the end of the year. We'll need to see how that continues to play out and potentially revisit that as well. So with that, I'm probably going to call this the end of the weekly report. We didn't cover a lot of different things, but we covered a few things in depthly. There's some other charts in the Discord as well. I just wanted to focus on that one in particular. That's what Jerome Powell chose to talk about the most. Keep in mind, this week we're going to get a lot of economic data coming out as well. You're going to get your JOLTS job openings. You're going to get some PCE data, personal income, personal spending, going to be big. Unemployment rate also going to be huge as well. So this week's pretty packed. Oh, PMI. Can't forget about the ISM manufacturing PMI. Get some data on how healthy manufacturing is looking right now. Don't have the highest expectation for that, to be honest. So keep it all in mind. This report's coming out late, but I hope you enjoyed it. On the next report, I'd like to get more broad, cover some more things. So make sure you subscribe to the channel. You ring that bell so you don't miss these when these come out. I will also highly recommend that you go watch the podcast I did with Doomberg recently. I think it was a really great podcast, even though I'm a novice podcaster. And when I reviewed that podcast, I definitely felt it when I was watching it. I took a lot of notes. I did a lot of reflection from that podcast on how I could be better. especially more articulate and more well prepared, especially when I'm talking to people who are just such high level experts in their area of expertise. As you might know, I do a lot of different things. I cover a lot of different industries very broadly. So I'm kind of a jack of all trades and not a master of none. And so when I talk to someone who's highly specialized, they're going to talk over my head. So I think I need to do more prep to make sure that I can at least develop some short-term specialization so that I can be more efficient and effective in those podcasts and really get the most information out of whatever guests we're having for your benefit. And I'll be working on that. Especially for the next podcast coming up, where we have a $1 billion fund manager coming on who is actually my mentor for Elliott Waves. He's the one who introduced me, who gave me all the books to read. And so I think that'll be a great podcast. You don't want to miss it as well. Yet another reason to subscribe to the channel and ring that bell. Just do it already. We just hit 400 subscribers. I'm super pumped about that. But I'm aiming for 1,000. So let's do it. Let's make it happen. I'll see you on the next report. Bye-bye.